Hey, what's up, my friend? So in today's video, I want to share with you why most traders fail with technical analysis. If you were to ask me to put a number, a percentage to it, I would say 90-95% of traders just lose money using technical analysis. And why is that? Let me explain. So here's the thing, right? Technical analysis, it comprises of many different tools. So if I were to illustrate, right, imagine this entire circle. It comprises like the umbrella, right? Technical analysis is like the umbrella. And beneath this umbrella, there's a lot of different tools, right? You have things like RSI, you have support resistance, you have price action, you have chart patterns, you have candlestick patterns, you have stochastic, you have pivot points, etc. So there's so many different tools under this umbrella called technical analysis. And here's the thing, right? Why do some traders find success with this approach while the majority fail? And that's the question. And a big reason is because the tools that you're using, it does not complement one another. Let me explain. Imagine this, right? You're all hyped up to showcase, right, a new car that you've built to the world. You spend your years building this supercar of yours in your garage. And this car of yours, it has 3 aircons, right? 3 AC, 2 for you, 1 for your wife because you need to show her who's boss. It has 2 gearboxes for extra speed and 5 wheels, right? Because you like odd numbers. But guess what? You didn't build a car, but a huge, useless paperweight. And the point I'm trying to make over here is that technical analysis, right, is like this if the tools that you're using does not complement one another. Yeah, it's just going to be a huge paperweight like the car. So now the question is, how should you then use technical analysis such that it complements one another? So this is where you need to make sure technical analysis tells you these 4 things. Number 1, it tells you what are the conditions of your trading setup. When do you enter a trade? When do you take profit? And when do you cut loss? So let me give you an example of how all this comes together. So let's say you have a pullback trading system, right? You're identifying stocks that are in an uptrend like this. You're waiting for a pullback. You're buying on a pullback. And let's say you wait for a bounce and look to sell, let's say, at resistance to capture a swing. So how can you then use technical analysis to bring out this trading idea, to treat this trading concept such that you can actually use it to trade it in the live market? So here's how. So you know the idea, the concept of behind this trading system. So what I'll do then is, number 1, ask yourself, what are the conditions of your trading setup? How can you use technical analysis to define the condition of the trading setup that you want to trade? So in this case, what you can do is that you can use a tool like the moving average. For example, the price has to be above the 200-day moving average. So this is where the moving average comes into play. It has a purpose to help you define the trend, where the price must be above the 200-day moving average. Next one, when do you enter? So you're looking to buy on a pullback. So what technical analysis tools can you use to help you define a pullback? There are many out there. So for example, in this case, let's say we go with the RSI, okay? The RSI value, okay, we are looking to make sure that the RSI value, let's say, is below 30, for example, right, to define the pullback. Right, and you enter maybe, let's say, when the RSI is below 30. That's an example. When do you take profit? Or let's say you take profit at resistance or before resistance. Yeah, so using the concept of a price action, support, resistance. And when do you cut loss? Let's say if the price breaks support, you cut loss. So can you see how we are now using all these different technical analysis tools to bring to life the trading concept, the trading strategy that you have in mind by answering these 4 questions over here? And this is how you use technical analysis to complement your trading. You don't just want to slap, 10 moving averages on your chart, because it's not going to deliver any extra value. It's like having 3 steering wheels, 2 gearboxes. Doesn't make sense. Yeah. So this is how, right, you want to approach technical analysis and how to make it complement one another. And here are 2 pro tips that I have for you. when it comes to technical analysis. So every tool, every indicator, every line on your chart, it must have a purpose. If not, remove it. Trading is not about, it's not like a beauty contest where you're trying to make your charts as pretty as possible, see who is the prettiest looking chart, right? And then you win prize money. It doesn't work that way, okay? So what this does is that if you don't do this, right, what you're going to get is that you're going to get conflicting signals, analysis paralysis, and distract you from the things that matter, distract you away from your own trading plan, right? You get conflicting signals because let's say you have multiple indicators on your chart. One indicator say buy, the other one say sell. Which one do you follow? There you have it, conflicting signals. You get analysis paralysis, where you have so many things on the chart, you analyze, and you feel confused and frustrated. I don't know, what should I do now? Close your monitor and take a break, right? That's probably the thing you need to do. Or even worse, distract you from your trading plan. You didn't have a plan, but because you have so many things on your chart, it distracts you from the things that matter, which is your trading plan. So this is why every tool on your charts, every line indicator must have a purpose. If not, just delete it. It's not going to add you. It's not going to make you a more profitable trader by having a ton of nonsense on it. So now, moving on, right? I also want to talk about another reason why many traders fail with technical analysis, and it's because they don't have an edge in the markets. Their trading system doesn't have an edge. What does that mean? So an edge, right, is something you do repeatedly that yields a positive outcome. And an edge can be quantified using this formula over here. Let me explain. It's not difficult. E, right? Some people call it expectancy. So if your E is positive, it means that you have a positive expectancy. If it's negative, then negative expectancy. Your winning percentage is just your winning rate, how often you win. Average gain is that what is the size of your average winners. And this is just the opposite, your losing rate and size of your average losers. So let me give you an example so you can see how this works. So imagine this. Imagine you toss a coin. Every time it comes up head, you win $2, right? And what are the odds of it coming up heads? 30%, right? Nah, just kidding. It's 50%, right? If you toss a coin, you know that 50% of the time it's going to come up head. Likewise, if you toss a coin, 50% of the time it's going to come up tail. So now with these numbers that you have, you can actually plug in into this formula I shared earlier. So this will be 50%, average gain is $2, 50% is your losing rate, and your average loss is $1. And there you have it. So your E is 0.5. What does the E means? Simply put, right, it means that on average, whenever you toss a coin, on average, you can expect to make about 50 cents, 50 pence, wherever you're in the world, right? Singapore, we call it cents, 50 cents per coin toss. And if you toss the coin 100 times, you can expect to make around $50, right? At the end of the 100 tosses of the coin. Okay, so this is how you actually use the E expectancy. But the key thing over here is that you want to make sure that your E, your expectancy, is positive. If it's negative, it means that you don't have an edge in the markets and you pretty much need to refine it or find something else altogether. And this brings me to the next question. How do you find an edge in the markets? Right? So you guys are probably thinking, but Rayner, how do I find an edge in the market? It's not that easy, man. If it's so easy, right? And all of us were printing money, right? Like the casino, right? So there are a few approaches to it. Number one, you got to backtest your trading system, your strategy based on proven concepts. And this is actually the approach I go with, that I myself personally like to use, right? Because it's more efficient. You can get results much faster. So you're going to backtest a trading system and idea and see how it has performed over the last 5 years, 10 years, 20 years, etc. For those of you who are more of a price action trader, discretionary trader, you probably want to forward test it if backtesting is it's not too practical for you. You want to forward test it in the live markets and see how it performs. And even price action traders, you are actually able to do backtesting as well. So forward testing is if you want to take things a step further and see how it performs in the live markets over the next 1, 2, 3 months. Yeah, and of course, right, this takes a ton of work. In fact, I think this is one of the hardest part about trading, finding an edge in the markets. And this is why, if you want to shortcut your learning curve, you can go down to my website over here, tradingwithrayner.com. Okay, the link is over here, and download this guide for free. This guide is called the Essential Guide to Systems Trading, where I'll share with you how to actually find trading strategies that has an edge in the markets using this proven formula of mine. And I'll even share with you a simple trading system that has an edge in the market, so you can use it as a framework to develop your own trading systems if you wish to. Yeah, but all in all, this guide I would say is essential, right, if you want to shortcut your learning curve and trade with strategies that has an edge in the markets. Now, moving on. Another reason why many traders fail is because system hopping. Okay, let me ask you, right, have you ever come across, learn a new trading system? Could be from a website, a book, blog, whatsoever, and you're excited about, yeah, right, a new trading strategy, a new system, hoo-yah! So at the start, you have a few winners, right? 3, 4, 5 winning trades in a row. And then slowly you face your first loss, your second loss. And before you know it, you're down 5 losing trades in a row. At this point, right, you start to doubt yourself. You start to wonder to yourself questions like, man, did the trading system stop working? You know, did the market conditions change? Did I do something wrong? And what do? Well, after 5 losses in a row, you think that, man, this system is no longer working. Maybe the market conditions has changed. Let me find something else, something better, faster, cheaper. Just kidding, right? In Singapore, we're always looking for something faster, better, cheaper, but you know, when in trading, it doesn't quite work that way. So you look for something newer, fresher. And then this process will just rinse, repeat itself again, right? You find something new, winners, losers, give up, find something else again. But here's the thing, right? If you look at this results over here, this is a trading system, right, that I teach in my book called Trading Systems That Work. And I want to highlight to you something important over here. If you look at this system has like 5. Okay, if you just ignore this one over here, like 4 losing months in a row. Meaning 4 to 5 months in a row, this system has lost money. And it's not the first time it's doing this, right? If you look at over here, there's like 3 losing months in a row. We have an 18% drop, right, in 1998 for this system. Over here, you have another 4 losing months in a row. Okay? So what's the point I'm trying to make? The point I'm trying to make is that every profitable trading system, even if it has an edge in the markets, you will face a series of losses. You will face drawdown. And if you were to quit in the midst of a drawdown, then what you're doing is that you will not see the better days ahead. You will not be able to reap rewards like this, right? If you look at this, right, in 2006, right, a drawdown occurred, which is somewhere about here, right? If you give up and not able to ride out the drawdown over here, you miss out, right, this exponential profits, right, in the later years. And this will be the same for every trading system. You're going to face a drawdown. If you hop from system to system, there's no way you can be a consistently profitable trader. All right? So you have to embrace the losses. And by the way, if you want to grab a copy of the book Trading Systems That Work, I'll put the link below this video in the description. You can see over here, right, we will pretty much, this book contains 3 different trading systems for you to profit in bull and bear markets, even during a recession, right? You can go down to the link over here, tradingsystemsbook.com, and grab a copy. And here's the thing, right? It's risk-free, right? If within 180 days you grab a copy of the book, you don't like it, just email us and we'll happily refund you in full. No questions asked, right? So this is kind of risk-free for you, right? So just click this orange button, right? And you can grab a copy of this book. Now, moving on. The question is this, right? How do you then avoid system hopping? Few things you must be aware of. Number one, you must have data on your trading system. Like, you know, what is the winning rate? What is the maximum percentage drawdown, etc. So you have a frame of reference to know how the system is performing now relative to the past, right? So let's say the historical drawdown is, maximum drawdown is 30-35%. So right now, if you're at 30-35%, you want to ask yourself, right, did something change? Did market conditions change? Is it supposed to be performing well in this market condition or not? So this is where the second question to ask yourself is this, right? Know when your trading system underperform, right? So if you are, you know, like trading a stock trading system, a trend following stock system where you are supposed to profit in a bull market, then guess what? In a bear market during a recession, that system is supposed to lose money, and you shouldn't freak out because that's the nature of that system. No trading system is going to profit in all market conditions. It's important to know the market conditions that your trading system will perform well in and the market conditions that your trading system will underperform in. So when a trading system underperforms, right, you then know, right, is it due to the market conditions or something else altogether? All right? And here's a pro tip for you, right? Understand that trading is all about probabilities, not certainty. I'm not sure who I heard that from, right? But this quote really stuck with me. Trading is about probabilities, never certainty. You can lose 10 trades in a row, and it's still within the realm of possibility, right? Even though it's a profitable trading system, especially trading system that has a low winning rate, like, you know, trend following 40-45%. It's common to see, you know, 10, 12, 13 losses in a row. But if you have the data to back up your trading system, if you have the data and you know that you have an edge in the markets, you got to power through this, right? Instead of, you know, system hopping from one system to another. So with that said, right, let's do a quick recap to what we've covered so far. The three main reasons why traders lose with technical analysis is number one, they don't have a trading plan. Okay, their tools are not even complementing one another, usually at conflict. Number two, they don't have an edge in the markets. If you don't have an edge in the markets, you won't have conviction in your trading system. And if you don't have conviction in your trading system, it will lead you to system hop, right? So all these reasons, right, they're kind of like intertwined and linked to one another. Okay, and before I go, I notice myself keep saying the word okay. So before I go, you can go down to my website, tradingwithrayner.com, and grab a copy of this guide, the Essential Guide to Systems Trading, where I share with you how to develop proven trading systems that work, plus even give you a trading system, right, as a framework that you can use to profit from the market. So with that said, I wish you good luck, good trading. I'll put the details, the link in the description below. Go and check it out, and I will talk to you soon.